Welcome back, ladies and gentlemen. Thanks for tuning in to another Mining Stock Education episode. I'm Bill Powers, your host. I appreciate you tuning in to this podcast. If you want to reach out to me, you can find me at bill@miningstockeducation.com, and I do appreciate those of you that have written to me periodically. Well, we have an update interview today with one of our sponsor companies, Aton Resources. About a month ago, we heard from Aton CEO Mark Campbell. He gave us an update after 36 of the 50 reverse circulation holes were reported at the company's Rod Ruin project. During that interview, Mark said that the Rod Ruin project appears to be shaping out to be a large, near-surface, bulk tonnage gold deposit with high-grade chutes. Well, Aton just reported the final 14 holes of the 50 holes of Phase 1 of this drill program, and here to discuss the results and Aton's exploration plans for 2019 is Javier Odunya, who is the exploration manager with Aton Resources. He's a returning guest. So Javier, welcome back to the podcast.
Yeah, hi Bill. It's good to be with you again.
And I'd like you to give us an overview. The 50 holes are reported now. Kind of give us some of the highlights and what's the significance at this point.
Okay. Well, as you know, we finished drilling in December. We got our final assay results back from the laboratory in Romania. They came through in January. And obviously, as you said, we put out the results of the final outstanding holes last week. It was so the final 14 holes. Now, we're very pleased with the program. Essentially, our main objective was to get out there. It was the first pass program to go and have a look at as much of Rod Ruin area which we could practically access. As you know, it's a little bit rugged up there, so there's issues involving getting drill sites in. But really, what we wanted to do was go out and test as much of the mineralization which we'd sampled at surface over the last few months now. We think we've done that. So we drilled 50 holes. We drilled a little over 4,000 meters, so about an average of 80 meters per hole. Now, again, as you know, we found a lot more underground workings, ancient underground workings than we were expecting, which is a good thing in some ways because clearly indicates there's plenty of high-grade gold there. But in other ways, it's not such a good thing because we had to abandon some of the holes. So we drilled about, as I say, 50 holes, drilled exactly 50 holes, about 80. Now, some of them we abandoned very close to surface at about 5 meters because we were hitting a lot of these underground workings very close to surface, in some places quite unexpectedly. And some holes we took to the maximum depth we could drill, which was 200 meters. Now, Capital had 200 meters of rods on board. So we took... So 3 or 4 holes we took all the way down to 200. So the results were good. We got a good look at the whole of the area, and we were pretty satisfied with the overall program.
What about some highlights? Can you highlight some particularly good holes that you liked?
Yeah, well, I guess we had a pretty good start with hole 3. We started at the Aladdin's Hill end of the deposit. It's where we arrived, where the road came in from the west. It's also where we had done a significant amount of surface. We found old workings, and we'd actually been down these workings 30 to 40 meters. We'd found a lot of visible gold at surface at Aladdin's Hill, so it looked pretty exciting. And it was where we arrived, so it was a pretty obvious no-brainer place to start drilling. So we drilled the first few holes there, and of course in our press release, which came out in the Discovery press release, which we put out at the beginning of October, we had a pretty spectacular intersection in hole 3. It was about 36 meters essentially from surface at 12.5 grams. So that was a good start. Unfortunately, when you start with something like that, it's pretty hard to replicate something like that. But what we've been out, as I say, is looking at the area of a whole, and we've seen a lot of mineralization over a lot of the area. But the good things are we've also been to other zones like the Spiral Pit, and we've hit good sort of plus 5 gram intersections over decent widths. So we've hit in hole 29, I think. We also had some good high grade mineralization in hole 32, I think, on the central buttress zone, also 10 meters at over 5 grams. And the last hole, which we just repeated, hole 50, which we intersected a thick zone of sulfide mineralization. We also had a high grade zone at the bottom of that. Again, we had over 10 or 11 meters at over 5 grams. So what we've done is we've intersected a lot of mineralization over a large area, which was really the number one objective of this program, trying to identify mineralization, see if it's actually there and it's not just a surface artifact. Clearly it's not. But we've also intersected these high-grade zones as well, so we're pretty happy with that.
We're obviously a ways away from a feasibility study, and your answer would be, of course, a forward-looking statement, but with some of these high-grade chutes so close to the surface, that potentially could make this project more economical. If you start with a high-grade starter pit, your CapEx is going to be lower, and you can also pay back the money you need to borrow to build the mine quicker. So, I mean, that's still a possibility for this project to have a high-grade starter pit potentially. Is that right?
Yeah, absolutely. Absolutely. I mean, a lot of as I say, it was a first pass program, so we were testing mineralization, which we'd sampled at surface. So we weren't trying to hit something 500 meters down. We were testing what we saw at surface, as I say, to see if it was really mineralization in bedrock or just a surface artifact. Now, clearly it's not. Clearly we've drilled good, wide, thick intersections from either at surface or very close to surface. So yeah, for sure. We've had good, wide intersections at lower grades than some of the ones we just talked about, but good, solid intersections, 30, 40 meters at 2 plus grams effectively from surface. So, these would be very easy to dig out in terms of mining. You'd be effectively mining ore from day one, and it's all oxide material, so it would probably be pretty amenable to leaching in terms of looking at it from a mining perspective. You would have an incredibly low stripping ratio on a lot of mineralization we've been hitting at surface. So, all the early indications, and we're seeing it over a wide area, as I say, we're seeing mineralization stretched over at least 500 meters between Aladdin's Hill and the GFZ down at the southeastern end. So in terms of a mining project, it's perfect. You can't actually get anything better than that, really. Low strip ratios, decent grades, not spectacular grades. It'd be nice if it was all 12 grams, but that's not realistic, of course. But in terms of a potential mining project, it looks great. Yeah.
So phase 1 is completed. You're currently getting ready for phase 2. Can you talk about phase 2? Are you going to be going deeper than 200 meters? And then why did you choose the particular targets for phase 2 of the drilling program?
Well, we're still going through the results of phase 1. We haven't fully drawn up the sections and so on and so forth. It's a bit complicated. Structurally, it's quite complicated. In many ways, we have a very interesting license area. We have a variety of different gold mineralization styles throughout our license area, which we've talked about. So we have a lot of orogenic, typical shear-hosted gold mineralization in certain places. In others, we have granite-related, which looks like intrusive-related gold deposits, and then we have a series of carbonate-hosted gold deposits, such as at Hamama, and such as the new discovery at Rod Ruin, and probably also another discovery we made last year, I think, at Waira, and also possibly at Abu Marawat. So what we think, we have a continuum of mineralization styles, and Rod Ruin looks in many ways a lot like Hamama, but in many ways it's a lot different. So we're still figuring out the geology, what clearly is the case, which is what makes Rod Ruin really quite attractive, is that the grades are clearly considerably higher than what we see at Hamama. So we're very pleased with that. We're still as I say, figuring out the geology. It's complex structurally. I won't go into the details, but it's going to take a little bit to put together. But essentially, phase 2 will be extending on what we've done on phase 1. Again, the nature of the site. It's not always easy to get drilling positions in, so we will be extending the drilling to follow up some of the areas which we've already drilled. We need to go back and try to get more of a grid pattern to be able to actually join the holes up in terms of moving towards a resource. Following up some of the work, and I think one of the most exciting things, what we're particularly excited about, notwithstanding the fact that we've got this easily mineable, very economically attractive oxide mineralization at surface, is we see this deep sulfide mineralization in a couple of the holes, specifically 17 and 50. Now, we believe that this is where the real big potential lies at Rhodruin. If we can identify a significant big bulk sulfide resource, and it could turn into really something pretty big and substantial. So chasing that out is going to be one of our objectives, as well as following up what we've done in phase 1.
Aton's exploration license was just extended by the Egyptian government. Can you talk about the significance of that?
Yeah, sure. It's very good. We're very pleased with that. They've given us a 1-year extension. Now, essentially, as our current concession agreement stands, we reach the end of the license, and then we have to move to a commercial declaration. Now, I'm not going to go into all this because obviously Mark's talked about it in more details, but essentially they've given us a year's extension, so that's put that off for an extra year, so we can continue exploring as we are. We had some of the senior guys from EMRA come down and visit us on site. They were stunned when they saw what we'd been doing at Rhodruin. They just had no concept of what we're actually doing on site. So they were, they were astounded to see these rigs and bulldozers working up on the sides of the mountain. So but bottom line is they were very pleased and very happy with what we were doing and what they saw, and are very supportive. So they've agreed to give us another year's extension now, so that effectively is a standstill on the existing concession agreement. They've also verbally indicated that, that as long as we're working, which of course we will be, they're happy to give us another extension at the end of this year and going forward. We will see what happens, obviously. But essentially, it's given us the opportunity to continue doing what we're doing, continue advancing Rhodruin, and continue to advance our exploration program. So we're very happy with that. And then, of course, there's the change in the mining legislation, which is all going on. And again, I know Mark will have talked about it, so I won't talk about it. But again, maybe in a year's time, maybe we will get to move to a completely new set of terms and conditions. So essentially, the 1-year extension is exceedingly valuable. It gives us a chance to carry on doing what we're doing, and it's basically a standstill.
Can you talk about your exploration plans for Hamama this year?
Yeah, we've as you know, we delivered a technical study to EMRA in May last year. And that was on the basis of that, again, as part of the licensing, terms of the licensing. It's a wee bit complicated. They gave us a 6-month extension through to January. And now the intention of that is that at the end of that, you deliver a full feasibility study and move to, and essentially you move to a mining license. Now, we explained to them, in May last year, it's not possible to move to a full feasibility study in the sort of time limits are involved. So this is one of the tricky aspects that you have to deal with the licensing regime here. But essentially, our plan is to continue to move that forward. Now, we've done a preliminary economic analysis on it. We haven't released that, but it looks quite good. We have a nice, favourable oxide deposit, certainly at the top of Hamama, which is what we concentrated on. We didn't look at the deeper sulfide resource, and interestingly, it looks in many ways very similar to what we're seeing at Rhodruin. So essentially, we would look to this year. Rhodruin will remain our main focus. We want to continue to advance that. We believe that's our best looking prospect, but we also want to advance Hamama West as well. That's certainly part of the plan too, as well as doing some regional exploration on some of our other numerous excellent targets.
I encourage listeners to go to atonresources.com. There you can enter your email, sign up for the email list so you can be on top of the news, whether it's announcing the upcoming drill program or receiving the drill results, the assay results, as soon as they come in. Javier, as we conclude, are there any final thoughts that you'd like to share with the listeners?
Yeah, well, I'd just like to say we're pretty excited about where we are. We're pretty happy, as I say, with the first pass program at Rhodruin, and we have a lot of plans for 2019 going into 2020. As I said, we want to advance Rhodruin. We want to advance Hamama West as well, of course. And we also want to get back into some of the regional exploration. Now, we've concentrated really on Rod Ruin for completely justifiable and understandable reasons for much of 2018. Moving into 2019, while it remains obviously our primary focus, and we're going to continue moving it forwards, and we would look to be moving it forwards towards a resource estimate probably sometime in 2020. We also want to go back and look at some of our other targets. As you know, during 2017, we did a pretty comprehensive review of our license area and did quite a lot of sampling on some of our other regional targets, a lot of which are also excellent targets in themselves. So while we're advancing Rod Ruin and while we're looking to push Hamama ahead, we also want to go back and test and start actually drilling on some of these other regional targets. So we have a pretty big year planned ahead. It's pretty exciting. We've got a lot to do. We've got a big plan in front of us. All we need now is to make sure we've got the funding in place to fund it. But we're pretty happy with where we are, and we're looking forward to a pretty exciting 2019.
Well, Javier, thank you very much for the update. I appreciate you stopping by to keep us up to date.
No worries, Bill. Good to catch up, and I'm sure we'll catch up again. Cheers.
Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at miningstockeducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.